Welcome everybody to the retail shareholders of ArcelorMittal annual meeting virtually on Zoom. My name is John Andrews. It's a real pleasure to welcome Michel Wirth, who is main board member of ArcelorMittal and a very distinguished long-term person within ArcelorMittal, and also Hetal Patel. Hetal is in charge of investor relations and will field all your questions that you may ask either before this session or during the session. Please send them anything you want to know, and then he will ask me and Michel. Michel, let me turn first of all to you. I mean, everybody knows that ArcelorMittal is the world's biggest steel company. It's done, it's a long history, and it's just had its third quarter results. And those results actually have been incredibly good. Now, I think an outsider might say that's rather surprising given COVID-19, the effects it's had on the economies around the world. What is the picture now of ArcelorMittal? Why has the third quarter been so good?
Okay, hello, John. Hello, all the people all the investors who are listening to us. First of all, I would like to say that it is for me, once again, a pleasure to have a dialogue with you. You know that this is extremely important, and your voice is listened as much as the ones of any other investors. And so it's really a pleasure to share with you at least once a year and to tell you where we are. And as John has said it, indeed, ArcelorMittal today is in a very good shape. Q3 had been absolutely fantastic. And I think that the whole year will be a very, very good years, and everyone predicts that the year will be enlightened on continuation of what has happened in the third quarter, which means the best quarter since 2008. So absolutely marvelous. Now, your question is, I think, quite obvious for people, that people ask, how is that possible in COVID times? And I think there are really a few reasons on it, some being depending exactly on the strategy which had been followed by Arcelor, and some others coming from outside and where we have no real influence. And I may start out of this and give maybe one explanation, because what we have seen or realized after COVID was that during COVID, the whole supply chain of steel, I would say from the beginning, the steel makers up to the stockists, up to all our customers, what did they do? They tried to empty their supply chain in order to make cash and to survive. And when at the beginning of this year, vaccination started to be quite effective, that everyone became much more optimistic that the virus really went back, the economy jumped back very, very rapidly. And what our customers realized at that moment was that the supply chain was empty. And so as a consequence was that they did not only order more, because they wanted to grow and to take advantage of the bigger orders of our customers, but in the same time, they needed to refill their inventory. And the world was not prepared to that. They was not prepared to that with some of our customers. Look at the automotive industry, was not prepared, for example, for transporting iron ore and coal to the plants, and hence also increased demand of iron ore, surge of iron ore price. Remember, a good thing for ArcelorMittal because we are a big producer. Also a surge in price of coal, and some scarcity in supply. And the consequence of that was that to some extent, some customers really were worried that they would not have enough steel for fulfilling all of their activities. And that gave them this very huge price rise, which was, I would say, clearly higher than what was anticipated, strong demand, and so on. And we were living out of that throughout the the year with a peak, I would say, in July. Now, the second element is that we have a lag between the moment when we get in the order and the moment when we ship it to the customers, which means that it is precisely in Q3 and also partly in Q4 that our orders have the highest value, and that normally also our profitability per ton should be the biggest. And so that is, I would say, the outside effect of your answer. And then comes the second element of the question. That's also what did ArcelorMittal do? And maybe that we come back to it, but only in one word. I think that all what we have done over the last years in terms of cost cutting, in terms of reviewing our strategy, in terms of optimizing our footprint has made that, I would say, in almost all jurisdictions, ArcelorMittal today is stronger and more competitive than it had been before. And hence, also from that point of view, in relative terms and compared to some of our competitors in some of the jurisdictions, I don't speak about now specific names, but people in Europe know who are our big competitors. We can see that we had relatively done better than them, and I think that's the second part of your explanation.
I'm jumping ahead slightly, but given that you've got a surge in prices, both iron ore and steel, is this going to carry on into Q1 of next year, or I mean, what happens to your contracts?
So I think these are two different questions. We can say that the what we call the raw material basket, that is finally what you need to produce 1 ton of steel in the integrated blast furnace route. Roughly, you need 1.5 tons of iron ore, and you need 500 kilos of metallurgical coal. We have seen in the first stage this year, iron ore prices surging from $80 or $70 to more than $200, coming now back to $100, but still quite a significant price. And you had coal coming up later when iron ore prices were falling. So that the iron ore basket in general continues to be quite high, and so we are feeling a cost inflation very, very much. It comes to that also, as you have, as people also in their daily life feel that natural gas has become much more important, which is also a big cost element, and fuel has been much more expensive. Look at when you buy petrol for your car, everyone feels it, but in such a high intensive energy industry like steel, obviously that was a question of cost inflation, which means also that when you are managing such a company, you need to make sure that if costs increase, that this has to be reflected into price. So that has come. Now, coming to your second question of automotive, what is absolutely right, most of automotive contracts had been negotiated last year when there was not this cost push, and hence in 2021, automotive contracts have been really much less profitable than most of the other orders we have seen, because these were fixed price contracts, and we could not impose to most of our customers higher prices because of the huge cost increase we had felt. And hence, we are today negotiating most of our contracts for 2022. And what are we doing? We explain to our partners in the automotive industry what is going on, that our cost is much higher. And I would say these are obviously very professional purchasers, and they know that we cannot continue to supply at the same price. And basically, automotive prices, these are two parts of the price. The first one is the part of the metal cost, and this part will go up. And the second one is what we call the extras, and that is specialties. Let's say the extra we ask for the very sophisticated steels we are selling to the automotive industry, and which helps an OEM to reduce the weight of the car, to make it safer, make it stiffer, etc. And this part probably will not go up so much, except when we introduce new grades, but the other part will definitely be there. So we hope that it's a good surprise in 2021, when maybe some commodity prices, the margins won't continue to be as strong as they are today. That will be partly corrected also by the automotive contracts, which in terms of volume is important. Roughly, contracts represent roughly 20% worldwide for the group. But if we look at US or Europe, it is obviously much more, and we are more in the 30% of what's a part of these products go in our order book.
But aren't the, I mean, isn't the automotive sector a little bit trapped by the shortage of chips? I mean, there must be a problem from their point of view when they're negotiating with you.
That is absolutely clear. It was, for us, it was a little bit paradox in 2021, because as big OEMs could not produce what they had sold, they bought also less steel. Yeah. And so the bad contracts in terms of results were not so high in numbers, and we could reallocate some of the steel also to other users who had a heavy need to get more supply. So that was obviously very useful. On the other hand, how will it continue in 2022? We believe that in the beginning of the year there will still continue to be a chip shortage, so it will slowly evolve, but we foresee also that step by step probably the constraint will be released and automotive can start producing a little bit more, which is important because the order backlog are extremely long, and maybe for some of the people who have tried to buy a car, for some of the brands, they know that lead time is almost 1 year. So you can imagine that there is really a strong need for higher levels of production. And so in the medium term, I think, or let's say in the next quarters, this is quite positive for us. And we will make all possible that when the automotive steel industry needs more steel, that we will be able to supply them.
Going back just briefly to the Q3 results, I mean, your net debt now is just 3.9 billion, which is really a transformation from a few years ago. Your shares, your stock is investment grade. Things look rather good for shareholders. Is that going to continue, or will you start spending more money on capex and not giving so many goodies to the shareholders?
I think that we have had the occasion to speak many times together, that the group has decided some years ago definitely to strengthen its balance sheet. And as you mentioned it today, with a net debt of 3.8 billion, and despite some share buybacks we have done this year, this is today the most solid balance sheet the company has ever had in its own history. And why was that? In fact, the strategy of the company was to have a maximum of net debt, or the target net debt of 7 billion. Now, due to the exceptional circumstance and also following some asset optimization or sales we have proceeds we have received, this level is even further down. Now, how will it continue? I think also last year, and we had the occasion I speak to speak about that, the company decided to make public a new capital allocation policy, which means in fact that once the target net debt has been reached, so below 7 billion, we will first pay a base dividend, whose amount needs to be discussed and on an annual basis by the board of directors. And then for the remaining, we would distribute the remaining through different ways. And the privileged way, because also it is the most tax efficient one, was share buyback programs, which had been done in the now recently since the middle of last year. Now, what you have seen, and even in order to show this orthodoxy, you remember, our auditors probably also know that we have sold our assets in USA, USA have been sold, and the entire proceeds of that had been distributed to our shareholders in terms of share buyback. So this was absolutely good. So up to now, the group has decided to continue with this policy. And I think that we know that this is today a very, very useful policy, because interest payments went down drastically, and we can be hopeful and sure that we are able, even in periods which would not be as bright as the period we are living today, we would continue to generate free cash flow, so that we will be able to give back money to our shareholders, which is our policy. Now, this policy, I explained, will be regularly reviewed by the board. That is for sure. Definitely not for the worse, but probably easier for the better. On top of that, we will obviously also continue to invest what needs to be done in order to maintain our assets. We will also continue to invest strategically where we have internal growth opportunities, and we have several projects which are ongoing, and maybe later on we can discuss about it. And we have also announced that we want to be fit in the long run by finding the right solutions for the CO2 problem. And there also we have announced that in order to fulfill our goal by reducing CO2 emissions by 35%, for example, in Europe by 2030, we need to invest, and we are presently negotiating with also the different governments so that it can be shared, that what needs to be invested will be shared between the use of some of the cash flow we generate, and also some grants or some public money, because it is basically a political decision, and with Europe being in a front line, so that we need to have some support in order to support the steel industry in Europe.
I'm glad you turned to that, because I was about to ask you about COP26 and what you thought of the achievements or otherwise of the Glasgow meeting. And I think in terms of meeting your target for 2030, you're talking about $10 billion of investment, but half of which you would like to come from governments. Is that correct? What did you think of COP26, first of all? I mean, was it a step forward or not enough?
What I was very much impressed is that, in fact, consciousness of the CO2 challenge has dramatically accelerated. I understand that some green organizations were a little bit sad. They said it's not enough, it's too slow. But if we imagine, and would we sit down 5 years back or 10 years back, and we would have said 10 years back where we are today in terms of consciousness or so, it is absolutely phenomenal. Why do I say it? That is because I believe, and I think ArcelorMittal believes also, that in the future, this movement towards green economies and green steelmaking will accelerate. And that's the reason why ArcelorMittal also strategically has decided to take it as, I would say, its single most important strategic topic. I would say also, this is also the hot topic and the first priority of our new CEO, Aditya, who has really made out of this fight of CO2 a major step of his term, and that is going on. And that's the reason also why I think ArcelorMittal first has been, I would say, the first company who has explained the right way how to come to carbon neutrality. Second, that's the reason also why we have invested in many pilot technologies in order to see what is the best technology in order to reach the goal, given the specific situations in different countries or in different circumstances, knowing that there is probably not one solution for all. And now, third one, to say, okay, and this would be the capex project we would like to implement, and parallel to that, we have seen basically all the governments in Germany, in Belgium, in France, in Spain, everywhere. And then we have discussed, this is what we have in mind. Can you help us to do that? Because then we can also help you as a country and drastically reduce the emissions of CO2 which are there. And given that, in particular in Europe, with the ETS system, carbon today has a price. This is part of the equation, and it is a significant part, because today 1 ton of emission rights, the market price is more than 70 euros. And if you know, or if you recall, that you need 2 tons of emission rights in order to produce 1 ton of steel, that means inter alia that in an alternative new technology, you can be a little bit more expensive in OPEX, because you do not have to pay for emission rights. And that is also, which is part of our subject. And it is a good point for our governments, because the governments have taken for their countries commitments how much to reduce, and they need contributors. And so we say this is a win-win strategy for our governments, for the countries we are in, and for ourselves. And that is really at the basis of our strategy. And I think we can be very happy now to meet it. There is only one caveat on that, and that means that the European decarbonized steel industry needs to be set on a level playing field with importance, in order to make possible that steel can continue to be exported from Europe to outside. So this handicap, this cost handicap, needs to at some way to be solved. And in particular, also, if you have Russian or Chinese steel, which is heavily carbonized, it cannot come free to Europe. And that's the reason why with the European Commission, there's discussion about and the agreement in principle that at the European borders there will be the carbon border tax.
Is that going to actually work out, or is it going to become an administrative nightmare?
I think it will. I think it will work out. Question will be how will the details look at it? We don't know it yet, because the details have not yet been decided. And today we see two elements where the policy needs to be improved. The first one is that the European steel industry can continue to export, and that this negative cost differential, because it's cheap, it's more expensive to produce carbon-free steel than steel which emits a lot of carbon, that this needs to be compensated. And then the second one is, I give you an example. For example, you want to import or an European industry wants to import the machinery from China, which is made out of steel, and the steel component is significant part of the total cost. How can we sure that there will not be a transfer of industrial activity from Europe outside in order to overcome and this problem needs still to be discussed, but that is really industrial policy for Europe, and that needs to be discussed, let's say, with the Commission at the highest level and with the different industry ministers.
I mean, you mentioned China, and historically it seems to me that China has always been a bit in your bad books as an entity that really has been dumping excess steel on the market. This seems to have changed. If it has changed, is the change permanent? I mean, if you look at the Chinese economy, it is slowing down from its previous heights. In a sense, Xi Jinping seems to be making China as an economy more isolated than before, and certainly more domestically demand-driven. Is the discipline on steel manufacturing in China a permanent feature? Will things like the Evergrande financial problem affect the whole of the Chinese economy? I mean, how do you see China being as a competitor to you, and as a market, and as a potential ally, I suppose?
I would say, if I look at the situation today, I think it's fair to say that today the situation with China is under control. But with China, you never know, because China is not a market economy and it is not market behavior which is directing what firms are doing. Now, it is under control, but it is also under control, I would say, for two reasons. One reason is that the world has realized 3, 4, 5 years ago that China was massively dumping and countervailing, and hence we have seen in most of the jurisdictions today active or actions taken, which means that it is becoming increasingly difficult for Chinese steel companies to export to these countries. That applies for the US, but it applies also very largely to Europe, to Australia, to Brazil, to many jurisdictions, in particular to those jurisdictions which operate by themselves the steel industry, which is quite important. But I think also there is a second element in it, and that's purely a Chinese one. The Chinese realize also today, and they have been also heavily attacked in Glasgow, that CO2 emissions is very serious. And if you look now, exporting simply steel, and especially commodity steel, is probably not the most profitable way how to let your company grow. And if you see the pollution situation in China, you really have good ground to believe that the Chinese are on the way not to push too much their steel industry, because they need cleaner air. They need to document that they are not growing their CO2 emissions when the rest of the world, or when the industrialized world, and China is today part of the industrial world, is decreasing. And I think that we are doing that. And so from that point of view, we believe that there is a lot of logics and a lot of reasons which would explain why in the future the Chinese steel industry should try more or less to restructure, to concentrate, but definitely not to further grow for exports, but in the same time also work for new technologies and to try also to be more energy efficient and more CO2 efficient. But that,
before I ask, sorry.
No, that's fine.
No, before I ask Hetao to relay some of the shareholders' questions, can you say a word or two about United States? I mean, the Trump era is over, for the moment anyway, and the 232 mechanism is up for, I think, for renegotiation, or perhaps it's going to be phased out. How do you see the relations between Europe and the US in terms of the steel market developing? And also from a domestic point of view, because you are quite big in the States, how do you see the Biden infrastructure bill helping you?
Okay, also a very big question. We could spend an hour
it's a big industry
to answer it, but in order to be short, maybe first of all, in the US market was under Trump the market which was the most ring-fenced among others, and as before the Trump administration came into place, the US market was largely served also by imports, and Trump made that drastically more expensive and strongly reduced imports, and hence you had even a bigger scarcity and a bigger tightness in the steel supply demand schedule than you had in Europe. And the consequence of that was that, and is still today, that US prices are still, I would say, a third more expensive than European prices today, and hence a very profitable element. Now, this has been followed by new investment decisions in the US in new capacity, and these new capacities are mainly electric arc furnace scrap-based, and not blast furnace integrated. And so you see, continuing the trend we have seen in the United States over the last 30 years, where you have had a continuous decline of the part of the integrated steel mills versus the mini mills. And which today, that the mini mills are the market leaders, and I would say also the price makers on the US market. Now, in this context, maybe I would like to say a word that in this context, ArcelorMittal, you remember, has decided over the year to sell its assets in AM USA, which are integrated. And we decided to sell them to Cliffs, which is probably a good solution for Cliffs, because Cliffs has the iron ore base and the ArcelorMittal iron ore base were on the ways to be depleted. So we did not have really a solution how to supply with iron ore our own mills. And so for Cliffs today, they become integrated and they can better manage over the next years their production of iron ore. But what you have to see is that in the long run, the trends of reducing the part of blast furnaces will continue. Second, there is a need of strong capex, because the US mills were not the last mills which had been built in terms of modern mills in the US, so some more cash requirements. And third, the false CO2 problematic needs to be challenged also in these mills. And I think the full combination of that there was no longer a fit with iron ore, the long-term prospects, all this made this deal with Cliffs was probably very good for Cliff, but definitely was also the right strategic move for ArcelorMittal. Now, in the meantime, so the consequence was that our part in the US, our market share has significantly decreased, but we are remaining today in NAFTA with very strong assets, and we have three big assets in NAFTA. The first one is Dofasco. Yeah. I would say the best integrated mill in NAFTA, but there also we have negotiated with the Canadian government a transition path towards lower CO2. Then we have Calvert, which is the most modern finishing facility in the world. And there we have decided to integrate this plant by building a new electric arc furnace for, at the beginning, I would say 25% of or 30% of slab needs, but possibility to enlarge these activities so that Calvert will be partly integrated, which will be quite nice also in terms of supply chain, reducing working capital, and in terms of profitability and of supplying green steel. And then our third asset in NAFTA is Mexico, and there we will commission this year a new hot strip mill. So we are going downstream in order to be more present in the NAFTA market with finished steel. So really a nice strategy with I would say, world-class assets on the three locations. And so from that point of view, definitely our competitive strengths in NAFTA is strongly improving compared to the past due to the different aspects of the strategy I just tried to briefly explain.
I like the way you still talk of NAFTA when Trump managed to call it USMCA, but I think everybody understands. Hetal, any questions from you? And
actually, John, just another follow-up to the US NAFTA discussion. Just to reiterate, when can we see or expect to see some benefits of the US infrastructure bill in the US, and how much of this demand improvement can you expect to capture?
Okay, indeed, and I forgot this aspect to answer. I think it's a very big one, because for everyone who spends some time in the US, we have seen that the infrastructure is extremely poor, and that a lot needs to be done in terms of rail infrastructure, in terms of bridges, in terms of many things. And that is precisely where the US infrastructure bill will help. And we can see that this will definitely give an additional demand in the long run, for the next 5 to 10 years, every year, several millions of tons, which will add to the apparent steel consumption in the United States. Now, even if as a supplier, you don't produce the products which go directly in these infrastructure products, it will be beneficial for the overall steel supply and demand balance. It will be a strong support also for pricing, and so it will definitely be also a good opportunity for us, and also it will partly absorb some of the new capacity which is coming on stream in some of the mills, including, as I told you, in Calvert, for example, where we have our own electric arc furnace.
More.
Yeah, actually, there's a change in tact a bit actually on to mining. How do you see your mining strategy going forward? And can you provide an update on your Liberia expansion project?
Okay, so first of all, one of the lessons of 2021 has been that the combination of iron ore with steel is quite a fantastic asset, because we have seen in particular in Q3 also a very strong contribution to the overall profits by the mining division. It lengthens the value chain. It is useful. It is reducing the risks of the overall risks of the company, provided that your iron ore base is competitive one. And that's the reason also why the strategy of ArcelorMittal is, first of all, to make sure that the different mills, in particular the mills which are not directly next to an integrated plant, so the non-captive mines, those who are on the seaborne market, are extremely competitive and have a very high quality product. That is the case for the two big mines we have in this domain, and which is AMMC, so our Canadian mine on one hand side, and Liberia on the other one. One word about Canada is that this mine is very competitive from a cost point of view. It is excellent quality, and we just have now decided together with the Canadian authorities to transform our pellet plants into DRI pellets, which will be the product of the future, also for a low carbon steel making. So from that point of view, I would say in the long run, AMMC is really a strong basis for the future. Now in Liberia, we had produced a DSO, so that was in fact iron ore which was not beneficiated, and there we came at the end of our reserves, and the question was, what will we do? And we had since a long-term plan in place and already started some of the capex in order to restructure or to structure differently our Liberian mines by changing them into making higher quality iron ore through a beneficiation effect. And what we have decided was to launch this investment which is done parallel with a strong increase of our available capacity. So we had been the last years around 3 million tons. We had before nominal capacity of 5 million tons, and we'll go now progressively to 15 million tons of high quality iron ore fines, which can be used in our process. And what is also very important is that from a logistic point of view, this is this gives additional savings, because going from Liberia to Europe is obviously much less expensive than going from Australia and even from Brazil. So it will be excellent quality with an optimal logistics. And so from that point of view, I think also for our European mills, they will be in the long run very much can be supported by our Liberian project.
Talking of capex, I imagine that you are quite relieved that Ilva is no longer something that has to show in the results. On the other hand, capex is your initiative in India seems to be going extremely well. Can you just say a few words on both those?
So Ilva, I think that in the meantime, and due to the circumstances we were finding in Italy, also due to the COVID difficulties, due to the heavy discussion and the will of the local authorities to renegotiate the environmental issues of the plant, we needed to come to a new solution. And I think ArcelorMittal is a responsible company, and so we thought that the best way would be to try to have the authorities, the government on board. And the consequence of that was that the government was saying, I don't want to be a sleeping partner, I want to be a full joint venture partner. And hence the consequence of that is that in the today's situation, ArcelorMittal is a JV partner with the Italian government, but the consequence of that is also that the full restructuring of Ilva will be financed outside the ArcelorMittal balance sheet, and specifically on the basis of the balance sheet of Ilva, and maybe with the necessary support of the Italian government, because there's also a strong decarbonization effect in it. So we hope that this is the right answer. We hope now that all stakeholders will very strongly and positively work on this new concept. And so our hope is that this new reorientation will work, but we won't be sole responsible for its execution, because it is today on a standalone basis. Ilva is selling on a standalone basis. We are present in the board, we are having discussions, but we are not directly operating Ilva as a fully consolidated company. So that's for this. Now, second question is about India. I think it's a totally different story, because India, in fact, is a growth story. India today consumes basically 100 million tons of steel. It is foreseen that this will double by the end of the decade and maybe triple somewhere in the 30s. And the acquisition of Essar, which was an opportunity because it was the kind of Chapter 11 consequence, was a unique opportunity for ArcelorMittal to move. So we decided to move it together with our colleagues from Nippon Steel, who are also invested in Carve-up, as you know. And so we decided to move there with ArcelorMittal owning 60% of the joint venture and Nippon Steel 40%. Now, the year 2021 has been very, very good for Essar. We have seen, we have there a very strong management. We are running full. EBITDA margins are absolutely good. And we have developed there also our strategic plan, how to grow from 7.4 million to 8.4 million tons, and then to 12 to 14, with a long-term view that we have today. We believe the possibility to grow up to 30 million tons, and hence at least keep our market share, and in particular due to the quality of Nippon Steel and of ArcelorMittal, also in technical things, that we will be the supplier of choice for the very technical steel products on the Indian markets, what probably our competitors cannot really offer. And so this is really a good opportunity, and I think that everyone is very keen how to say it. Now, in terms of capex, you are right. These are there is a lot of money which is involved, but what you need to realize is first that in India, capex is less expensive than, for example, in the Western world, because, for example, also labor cost in the capex is all the time a very big component, is much cheaper. And so that, and second, as the company is very profitable and doesn't have too much debt and has the financial capability, we believe that this expansion plan can be financed through its own cash flow it generates. So from that point of view, really a nice opportunity Remember, we start with 7 million tons. We want to land with 30 million tons, and that could be financed through the balance sheet of the company. Really a nice project, and I think it should also very much pleasing our investors.
But do you see any other potential opportunities? Because surely, if there are opportunities for M&A or for or joint ventures, it could be at the expense of your plans for returning more money to the shareholders and for share buybacks.
I don't think that's not really the issue today. Today we are saying that we have quite a lot of opportunities. First of all, inside our own plants where we have growth opportunities. I give you some examples. The hot strip mill in Mexico. We are investing in downstream in Brazil. We have the mining project in Liberia, but also some mining projects in Brazil and Mexico in order to support our two plants there and to make them more competitive. And so we can see we have some investment in Dofasco plus the whole decarbonization program we were discussing earlier. I think these are very big prospects. On the other hand, in many of the jurisdictions where we are, as we are there number one in terms of steel producer, there's not so much room to further consolidate because the competition authorities wouldn't allow ourselves growing too much. For example, that was a problem was a problem also with Ilva in Europe, and so we need to be careful. On the other hand, we have seen also, last but not least, I would not say there will never be an acquisition, but over the last M&A acquisitions we have done, for example, in India, also we have tried to be quite careful and try to make that compatible with a strong balance sheet. We have suffered too much for a long run to have too much debt, especially in periods of high inflation and high interest costs, that we definitely don't want to come back to that. But that shouldn't prevent us to, if we have some maneuvers, and if it makes sense to make a transaction to make it as it has been shown in India.
I was noticing actually one of the analysts thinking that actually now ArcelorMittal has become a blue chip company, somehow beating the economic cycle, the industrial cycle. Hetal, we don't have much time left, so Hetal.
Yeah, I know. I think I'd like to raise a question actually raised by Frederick de Bril. Could you ask Michel Werf how ArcelorMittal is improving its health and safety performance?
Okay, I think that's a very important question, and I would thank this investor because health and safety is on the top of our priorities. And we need to know that. And I think that there is not one meeting we are having together, it being the board of directors, it being the specific committee, it being management meetings also, where we don't start with health and safety. This has given us over the time some good progress. And today, where we are, and I think with if I look at the number of accidents we have, the systems we have in place, we have made huge progress. We have reduced the number of accidents, of recordable accidents, by a factor 5 or 6 since the beginning of the creation of Arcelor. So, which is very, you would say you could be very satisfied. But on the other hand, we have too many heavy accidents, and when we have an accident like the one we have had in the mine in the coal mine in Kazakhstan, this is absolutely a drama inside the company. It just happened when we were finalizing the third quarter results, which was, as I told you before, the best in history. But when you are then confronted with such a drama, you are, what can I say? You are really in a terrible mood, and you turn back to everything, and you are telling you, what do we have to do for that not to happen. And I think what is the factor is that we need to start with continuing to reduce incidents, because it is, as you know, this is a pyramid. You have many incidents and then near misses and then not so severe accidents, and then statistically you have accidents. And the more you can avoid having incidents at the beginning, the less you have a probability of having an accident. So what are we doing? We have also made some organizational changes in the sense that we have established an Health and Safety Council, which is shared by the CEO of ArcelorMittal Brazil, where we have, I would say, the most solid results in terms of safety within the group. We have decided also to make safety a bigger part of the variable short-term remuneration of our managers. And we are now, once also with COVID, telling people and trying that everyone throughout the hierarchy of the group goes much more on the floor, be sensitive with our people, that we need to take advantage of, that we need to take attention in order to make really a step forward in terms of safety.
Hetal, a final question from shareholders.
Perhaps going back to the actual energy cost inflation point, can you give an indication of the impact of cost increases on your business? Have you been able to pass these through for surcharges to customers in your European operations?
I think in order to calculate the cost inflation, I think it's quite easy, and every investor can do it by itself, because basically, as I told you, to produce 1 ton of steel, you need 1.5 tons of iron ore and 500 kilos of coal. On top of that, you have some needs of gas prices, but in the flat steel price, in the flat steel industry, it is largely hedged, so that the cost inflation is a little bit moved around. In long, I would say, where you have electric arc furnaces and your sole energy is electricity and power, electric power and gas, there the cost impact was really very high, as in particular also scrap prices went very high for 2 reasons. First of all, as there was a very strong demand, and second, also flat steel producers or integrated producers tend to try to increase their scrap input in the traditional BOF in order to reduce overall their CO2 emissions. And so that reason, scrap was in the round of $500 per ton, which is extremely important, which is more expensive than rebar prices were 1 year ago or so. So it's really it was a difficult thing. So how do you manage this? You explain this to your customers. What we have done also is to say we need to introduce an energy or a cost surcharge due to these circumstances. When you are doing that, this is, I would say, more an educational tool in order to objectively explain to your customers that the price increase is due to the cost increase, but it is not by introducing a surcharge that the final price of steel will increase, because the final price is all the time a question of balance between supply and demand, and that happens also. And so from that point of view, the question of which has been asked, you have not been able to impose the surcharge, I think it's not really right. It is much more an educational tool than to change the rules of the game, because you have to be a monopolist to change the rule of the game, and definitely we are not a monopolist, and we have to try to find, and we don't want to be also a monopolist, because you want to have a long-term relationship with your customers, but our interest is that they pay a fair price on this.
Did I see another hand raised?
Yeah, sorry. We managed to squeeze one more in, actually, on the ESG topic again. And it's really about green steel solutions under our X-Car brand. The question is, what has been the response from customers, and are you able to command a premium to offset the additional costs?
Okay, so I would say the X-Car initiative is in fact threefold. It is first to be to identify carbon-free steel products which can be sold to the customers. It is second, an element of new technologies implemented in order to move towards carbon-free steel, and it is third, an internal investment fund investing in new companies developing new technologies which are relevant for the carbon-free economy. Now, the first is green steel products. As we implement today new technologies which reduce the burden, it is possible to isolate that and to transfer it and to specific steel products so that you can certify to a customer that he buys steel which is zero carbon or which is very low carbon, as we are doing it in long steel. And this is certified by an independent expert based on a certified methodology. And I would say this is something where we start now supplying. We are selling this year 200 or so thousand tons of these green steels. Very high interest from our customers, and also they are happy to, and they are ready to pay a higher price for it. Second part of the element, so the new technologies, maybe that I don't want to go totally through it, but I would recommend our readers to go on our site and to look at our climate action report, because this is very well explained there what we are doing, and then you can really see that from a technological point of view, the roadmap towards green steel is traced and that it is possible to reach it over time. And the third element, so that was it's a 500 million investment fund, which is allocated roughly for the next 5 years, each year by 100 million, where we invest in new technologies. Could be storage technologies, kind of batteries. It has been, we have decided to join the initiative of Bill Gates, who has a huge plan in order to sponsor new technologies which should aim to decarbonize the industrial economies. And there we have committed 100 million, and we are participating in this fund with other top industries. And then we are, and this fund is managed by an internal investment team, exactly like a fund is managed by a GP, taking the decisions, evaluating, and so I think it will give us new insight where technology is going. We didn't speak about hydrogen. We didn't speak about other technologies which will help to go towards decarbonization of our industry. And this is the third part of the XCAP initiative, which is, I would say, an absolutely exciting initiative, and it shows that the steel industry is really very up to date and a top technological industry. And that is important because it is steel which is building also the new world, and without steel, the modern world will not be built or reconstructed. And steel has one feature no other material has, that it is, once you have produced it, you can recycle it forever each time. And I think that our investors shouldn't forget. And in particular, if you can bring that in link with the green, or the path to green steels, then we can say we have many, many decades before us, which are extremely promising.
Michel, that's a very good note to end in. I was just looking at this, actually, your roadmap.
Absolutely.
And I was going to end on that. And the idea of net zero by 2050, but of course, another target in 2030 in Europe. I mean, we're only 9 years away from that.
Mhm.
How optimistic are you? If we have this meeting again in 2030, will you be saluting your success or saying there's still more to do?
I think we have the will to go there, absolutely, but we are not alone to deliver. And that's the reason why we have had this context I was mentioning before with the different governments. We have MOUs signed with all of these governments, but they need also to deliver. And in the meantime, we are, from a practical point of view, working on the different projects in order to make them happen.
Michel, mille merci. Thank you very much for spending an hour with us. Thank you very much, Hetal, and thank you very much to all shareholders who are tuning in. And any questions, please send them to Hetal. His email address you have, and I'm sure he doesn't mind being bombarded. But if he does, then that's too bad. And I wish you all a very, very good Christmas and festive season in the meantime. Take care. Thank you. Thank you, Michel.
Thank you.
Thank you, John. Thank you.